Can the digital Chinese yuan destabilize the US dollar? China has rolled out the digital yuan, and global finance community is buzzing about it. Information about its introduction, however, has been shrouded in secrecy thanks to the Chinese government's notorious media control. One aspect of the digital yuan that we know directly from a top Chinese official is that it is not designed to rival Bitcoin. Mu Changchun, head of the People's Bank of China's Digital Currency Research Institute, told state-run Shanghai Security News that the currency is not for speculation and it is different to Bitcoin or stable tokens, which can be used for speculation or require the support of a basket of currencies. We also know that it is reported in Chinese magazine Caixin that the big 4 state banks and 3 state-run telecommunication firms were a part of the process. The emerging narrative that the digital yuan is a full-out assault on the dollar as the premier reserve asset of the world is not quite accurate. The timing, however, is interesting and is warranting a response from U.S. banks and federal officials. For its part, the Federal Reserve appears to have awoken from its slumber and done a complete reversal about introducing a digital dollar. Just last year, Chairman Jerome Powell indicated that the U.S. central bank didn't see any possible material benefits in a digital currency. Then, in June, he informed Congress that his agency is, in fact, started working towards it. What the Fed is or isn't doing is arbitrary. What isn't arbitrary? The U.S. printing more money, $3 trillion this year alone, to offset the U.S. economy's sagging performance through the COVID-19 pandemic. Since another round of stimulus is on the horizon, another round of dollar printing is all but inevitable. Is that going to debase the dollar, thereby making it worth less, or will it be worthless? Although 2020 has been quite the global shakeup, it is not likely that the dollar will devalue in its entirety. The digital yuan is shaking up digital payment systems. Jeremy Allaire, co-founder and CEO of Circle, the company behind the dollar-based stablecoin USDC, believes that the digital yuan can stir the pot and hurt US interests precisely because it is an attempt to circumvent existing digital payment providers. Allaire, a featured speaker during the first ever crypto town hall in mid-August, said the digital yuan can be enabled for any household, firm, or nation-state to conduct business with China completely digitally. Further, Chinese digital yuan could be leveraged with nations that see value in the dollar. Lawrence Summers, former U.S. Treasury Secretary, threw cold water on Allaire's take, casting doubt that the digital yuan would be more than a digital currency for intra-country or regional transactions. According to Summers, the Chinese government is likely to restrict Chinese citizens' ability to move large sums of yuan. A report from Bank of America supports Summers' analysis, noting that Thailand, Singapore, and South Korea are considering offering their own digital currencies and that they may integrate with China's if immediate transfer and lower transactions costs make it more appealing than other payment systems. Ultimately, this is likely to be the actual and more realistic objective for China than a serious attempt to displace the USD status as the global reserve currency, BofA analysis wrote. So why the digital yuan and why now? China's tendency to tightly control its currency is evident in how they have cracked down on the open market trading of Bitcoin and other cryptocurrencies. How the government will react to Facebook's Libra cryptocurrency is also up for discussion. The Libra is backed by a basket of government currencies and is viewed as a potential challenge to China's capital account control, according to South China Morning Post. Finally, it should be noted that the Chinese yuan represents only 2% of the global foreign exchange reserves, even after it doubled due to the IMF inclusion. What China does appear to have is the first mover advantage. By turning to CBDCs, central bank digital coins, China is signaling that it is modernizing its currency via current technology and planning for the digital yuan to be the US dollar of Asia.